Welcome to Venture Podcast, presented by VNTR, the world's leading investors community, the place to learn from VCs and capital allocators.
We had these stimulus checks coming in, we had crypto taking off, and so everybody just had all this extra cash, and so there's a lot more kind of money start to go into angel investing and into startups. And so, kind of this ZERP environment, what was a really interesting time to kind of start the syndicate and kind of coming in at that point where Angels was like an established platform, but it still wasn't nearly as big as it is today. And there's not a secret sauce. It's just, let's just talk to as many people as possible. Then your reputation builds. And so you get more and more people reaching out. And so that you can kind of filter a little bit more and then, still just talk to as many people as possible. But every time, every month, every year, I'm filtering out more, but I'm still talking to the same number. I'm still talking to 50, 60 founders every week. And I've been doing that consistently for the last 4 years at this point. But now those 40 or 50 that I talked to are probably a higher quality than what I was getting initially, even though there were some really great companies I talked to initially. But
hey guys, welcome to the VNTR podcast. And today we host Ali Jamal from First Check Ventures, founding partner and big syndicator of funds. So Ali, welcome. We'd love to learn more about you and please share your background.
Yeah. Well, I'm an American. I grew up in the U.S., did my undergrad and master's at Stanford. I actually started my career as an investment banker. I did M&A for 3 years. Then I worked for 3 years as a data scientist. But really, I like to think of myself as a startup person. I've worked in startups for, more than a decade at this point, doing product and growth. Initially in Silicon Valley, and then eventually I moved kind of all over the world. I did a couple of years in Asia, and then I spent the last 5 years in Latin America. I led growth for a couple of different unicorns in Latin America. On the side, I've been an angel investor for more than a decade. And during the pandemic, I decided to double down on that. I started an angel syndicate on AngelList that has done really well. And I'm now kind of focusing my time on investing.
Amazing. Thanks for the intro. So you mentioned that you started as an investment in the investment industry. So what made you transition to startups?
I worked in investment banking, kind of early 2000s. And I just didn't really like the culture. I didn't think I was being rewarded for thinking or thought process or whatever. I felt like I was being rewarded for grinding out a bunch of, materials that often weren't helpful. I feel like they're doing a bunch of random analyses that don't really add that much value to anybody. And it really felt like, you're just taking, a percentage of these entrepreneurs who'd actually built things. And then you come in last minute, you get a swoop and you get to take a percentage of it. And I get the value that investment bankers can have, but it's just not how I wanted to do things. Like there's no real the real value that's being created is by increasing the price of something. To me, that doesn't really seem like a lot of value creation. I totally get why you need to do it if you want to sell your company and why you want to do it if you want to buy a company. But I want it to be actually having an impact and trying to build things and grow things and do things. And that just wasn't happening in investment banking.
So you mentioned that you started investing like 15 years ago. I guess you started investing back then when you were investment banker already.
Kind of after I'd left, I was working as a data scientist and, kind of was exploring different things, right? So I'd done some, did some public market investing. I did some, kind of late secondaries and kind of pre-IPO stuff. I was just trying to be more creative and think about other ways to make money. And then, ended up kind of coming to angel investing accidentally. I had some friends that were doing some startups. I had some friends that were VCs. I just kind of started investing casually here and there. I wasn't good at being a public markets investor. I didn't have the time and the discipline and the research to really I could make some interesting investments here and there. Some that did well, but it just wasn't something that I felt like I could continue to replicate. And, I'd also kind of moved to startups and was spending all of my time in kind of Silicon Valley. Like I said, I kind of got to Stanford. So a lot of my friends were already in startups and doing startups. I could tap into that network. And so I just felt like there was a place where I had kind of an unfair advantage of kind of knowledge of what was happening.
And you mentioned syndicates before. How have you found that journey of creating a syndicate, and kind of what would you do differently if you were to do that again, or would you even do it again if you had the choice?
I came into syndicates, to starting a syndicate as a GP, having been an LP in a bunch of them. And so I was able to kind of take that experience as an LP, all the things that I liked, the things that I didn't like, and try to make some of those changes as a GP. A part of me wishes I'd started it earlier and tried to do the stuff I feel like I found what I've loved in life or what I'm really good at in life a little bit later than most people did. And so I wish I'd found this, 10 years ago and had been one of the super early people on AngelList. And, maybe now I'd be walking around with a $200 million fund or something like some of those guys are. But on the other hand, right, if I had found it 2 years later, I wouldn't have as big of a syndicate. I wouldn't have done as many deals. I wouldn't be as far along as I am. So you can always kind of sit back and think about what would it be like if I had done this or I had done that?
So it's not too late.
It's never too late. And I think I also kind of just got lucky where I was at the right place at the right time. I started the syndicate kind of July of 2020, right? And we were kind of just starting the pandemic to a certain extent. And so, I think March, April, May of kind of the pandemic, everybody's like, oh, the sky's falling. And then I think in June, July, August, all of a sudden people were like, okay, no, there's still a lot of opportunity here. I actually beginning to work from home. Things are much more easy to happen anywhere in the world. So it started to be bigger emphasis on emerging markets, which was an area that was really exciting to me. And then, people just had more disposable income, right? We had these stimulus checks coming in. We had crypto taking off. And so everybody just had all this extra cash. And so there's a lot more kind of money start to go into angel investing and into startups. And so, kind of this ZERP environment, what was a really interesting time to kind of start the syndicate and kind of coming in at that point where AngelList was an established platform, but it still wasn't nearly as big as it is today. And it wasn't as popular as it was today. And so, but kind of, even though, I was a little bit late to the party, I was still early enough that I got to kind of ride with it to a pretty decent size. And I think even the people that came in 6 months or 9 months later had a much harder time kind of getting the traction or getting people as excited.
Exactly. It's kind of liquidity crunch happened later. Right?
Yeah.
So I'm not sure how many of these members that you gain in 2020, they're still actively deploying, but the momentum was definitely there. And
we did some really good deals at the beginning, right? So, the first deal we did got into YC and I ended up having these huge markups. And so it kind of set the tone that we were finding really great stuff very early. And we kind of were able to keep that up. So 1/3 of my pre-seed investments got into YC after we invested. And so having that kind of track record just attracted more and more people and really kind of fed into the syndicate's growth.
And how do you source your deal flow?
I don't think there's some magic secret. I think it's just talking to startups. I think it's talking to founders. I try to talk to more founders than any other VC out there or any other, person. And, when you talk to First Check Ventures, you're talking to me, you're talking to the partner. And so I feel like oftentimes the companies that are doing more active sourcing, they're sending out junior people and people that can't make decisions. I can make decisions on investing. And so I think that really makes a difference. And so being able to just talk to as many early stage founders as possible, stack rank them and figure out who I like and who I don't like and who I want to work with more. And there's not a secret sauce. It's just, let's just talk to as many people as possible. Then your reputation builds. And so you get more and more people reaching out. And so that you can kind of filter a little bit more, and then, still just talk to as many people as possible. But every time, every month, every year, I'm filtering out more, but I'm still talking to the same number. I'm still talking to 50, 60 founders every week. And I've been doing that consistently for the last 4 years at this point. Now those 40 or 50 that I talked to are probably a higher quality than what I was getting initially, even though there were some really great companies I talked to initially, but it was overall.
So it's a cool thesis to be first check investor, right? But most of the VCs, they mature with time, right? You will need to rebrand yourself that you're not first check at some point. Or you see yourself being the first check investor in deals.
I mean, like YC is still YC, right? And they still come in as early as possible, like 500 at Techstars and all these sorts of things. I like being the first check. I understand the first check. I think when I look at, startups that end up not working out or funds that end up not working out, it's like they had something that was working they were really good at, and then they pivoted or they added because they got cocky and they got greedy. I am more than happy to continue to stay focused on being the first check, continue to stay focused with, regional focuses and sector focuses, investing when I feel comfortable and kind of building out a portfolio over time. And the idea behind first check is really that there's this gap in early stage funding, right? And all right, like there are some great companies that go through things like 500 at Techstars and YC, but still only like 1% of the companies out there. And oftentimes those accelerators still need you to have, 2 years worth of traction or 18 months worth of traction or things like that before they'll even accept you. And so if I could come in 6 months before YC does, if I can, coach you or mentor you and find alternative paths, so maybe you don't take an accelerator path, but introduce you to your pre-seed investors or introduce you to your seed investors, I think there's a really interesting opportunity to continue to grow that out and to, as long as there's great startups happening, I think there's going to be a need for somebody to believe in them early and be that first check. And I think especially in emerging sectors, in emerging markets, and things that aren't as popular, aren't as trendy in Silicon Valley, I think that's where the real opportunities lie, right? Because there's less competition, there's more opportunity to really work with the founders and to really understand how they operate.
As a first check investor, what is the typical check size that you deploy? And do you really need a syndicate or rather a fund to invest at that stage?
I think both options work and some of the things and can even be as an angel, right? So I think some of the things in the portfolio could be, more like an angel check, which is like 10 to 50K, an alternative to the accelerator check, which is anywhere from like 50 to like 150K. And then, the syndicate tends to be a bit bigger because there's setup costs with setting up the SPVs. And that can be anywhere from, 100K to 500K. And it really kind of just depends on how far along are you in your journey and how much money do you really need and what your valuation is, right? So, you shouldn't be raising $500,000 at a $2 million valuation. But if you're just starting out, maybe you need, especially in some of these markets, like if you're in Nigeria, 50K takes you pretty far. So, maybe it is a $2 million valuation and you're getting a 50K check and that gives you, 10 months, a year's worth of runway. Right. And then we could kind of see what you could do in that first 6 months to get you a proper pre-seed done. The check size really kind of varies based on, kind of what you as a startup need. And then, if you need a $5 million first check, I'm probably not the right person. This is just not how I kind of believe in operating. Right. So there are startups out there like in biotech or, deep hardware or things like that, where maybe you need a $5 million first check, and that's great, but I just don't know enough about the spaces or write those kind of checks, so I'm probably not the best fit.
And also you picked LATAM as a region, right? Just be great to hear a little bit more about that and why you chose that region.
Yeah. So I don't know if I necessarily chose the region or the region kind of chose me. I had, been working in Asia and I was looking around for the next super app. I discovered Rappi in Colombia. And so I moved to Colombia and I'd made some investments in the region before and I was familiar with it, like traveling wise, but I never had actually lived there. And so I started living there and operating there and just got to understand more about life on the ground and where the real problems were. And, having a background in product and growth, and especially kind of growth at big companies isn't super common there. And so a lot of people reach out to me for either help or advice. And then, startups that I liked, I was able to kind of mentor and then eventually kind of maybe invest as an angel. And, kind of taking that perspective of, what are these people doing and how are they building? Like I was building out a really great network in LATAM, seemed to be providing really great results. And, I just think in general, there's a super exciting environment there, right? We're talking about 700 million people, the same GDP per capita as China. So we're talking about opportunity where there is about half the opportunity of China, but only 2% of the VC dollars compared to China. So there's just this huge market there that still kind of remains untapped. Even though there's been more money coming in, it's still not as much on a kind of per GDP basis as you have in most other regions. And so I think there's still a lot of potential to unlock it. And, one of the biggest things is there's just kind of a lack of successful tech kind of history there. And so there aren't really the angels there, and there aren't really the early stage investors. There are some, I think pretty well known, seed and Series A investors, but nobody's really coming in at that kind of, angel rounds anymore. And over the last few years, the people that had done it were mainly just other founders. And so, there's this kind of pretty big opportunity for a kind of first check type fund to come and help out the ecosystem.
And do you speak Spanish?
I don't. I speak enough to kind of get by, but I'm not fluent by any means.
And is there any industry focus that you chose to focus on, or you're quite agnostic?
I'm pretty open to talking to everybody, but, I worked in fintech and marketplaces. And so that's kind of where my background is. And so I tend to be more inclined to invest in those just because I understand the industries more. And I think there's a bigger opportunity in Latin America for those spaces. And so, I've done investments kind of in a variety of sectors, but those are the ones that I think are really kind of important and then, I can add the most value to.
Yeah. And what about AI? Like everyone is investing in AI or applied AI. How big is your portfolio in the AI startups?
So I try to be a little bit anti-hype. And so when everybody's going and doing one thing, I tend to try to do the other thing. I think that's usually when the opportunities lie and when the biggest upside is there. So everybody's doing Silicon Valley, so I'm doing emerging markets. Everybody's doing, Series A and late stage, and I want to do as early as possible. Everybody's trying to do these big, huge AUM hunts, and I'm fine running smaller checks. They're really looking for multiples. I think, I'd rather have 1,000x multiple than, big AUM. And so I think AI has a ton of potential, but 95% of the startups that I see in AI, to me, I don't think are going to be around in 3 years. They don't make a lot of sense. I don't know how much value they're really adding. I have invested in several AIs, both in Latin America and in the US, but I tend to be kind of very applied, very niche, and where like having that insider knowledge could really kind of create some real value. And I think they also tend to really have I kind of think back to about 15 years ago when we were making this kind of mobile revolution, right? And in that time, you saw all these companies that were mobile apps, but the mobile part wasn't really what was special, right? It's the app part that's special. It's what's the application that's special. And I kind of think about the same thing now with AI. It's, AI is not the special part, right? It's like, what's the problem you're actually solving? And AI is one feature of how you're doing it. It's a component of it, right? But nobody should be using it just because you're AI, and nobody uses a product now just because it's mobile, right? Like, we use a product because it solves a real problem.
How do you monetize that service, right? So
exactly.
It's quite expensive resource, and how do you provide value so that you make more money than you spend?
Exactly.
Yeah. So most of them will run out of funds before they actually generate much revenue.
And is it something that there's so much money pouring into the system? We don't have insight into the big players' roadmap. Could one of the big players come and squash you out? We don't have insight into what, not just the big AI companies are doing, but the big companies in your space are doing, right? So if you're doing AI for medical records, we don't know what the medical records companies right now are doing. They're sitting there on billions of dollars anyways. Why are they not, we don't know what they're investing in or how they're investing or, I just think it's a lot easier to look at an individual market and an individual problem and understand what's being solved and what the competition looks like versus on this kind of global scale of AI. And especially because all these things are going to end up competing with each other at some point, right? If you're doing recognition for one type of inventory, it's really easy to make the switch to another type of inventory. And if you're doing it for inventory, it's easy to do it for, payments. And like all these things, I think there's going to be all these different sub pivots on every company. And I think they're all going to end up competing with each other in one way or another.
That's a super interesting perspective, because I think there was a time when internet companies was a niche, right? And internet was a special thing, but obviously now it's not even talked about because it's just in everything. So I think people who talk about AI right now, myself included, I talk about it, I think are kind of missing the point, like you say, right? Kind of what's the actual problem that's being solved, and therefore is someone actually willing to pay for that problem?
And, when you look at internet, right, the big successful companies weren't in the first batches. They came out 5 years later. When you look at, mobile, the big companies weren't in the first batches. They came out 5 years later. You have to kind of go through this period of learning and whatever to find out where the real problems you could solve using these tools are. And so every time we've had this step forward in tools, we spent 5 years wasting money on things that didn't really have an impact. And maybe we'll get better and we'll shorten up to 4 years or 3.5 years. But I don't know. To me, it just feels like there's other places to put my money right now where I know what the impact's going to be. And I'm not just wasting it on servers or things that have a negative environmental impact. I'm not an extremely environmental guy, but to a certain extent, right? Just spending money on these things that I don't know where the actual return is, and have these kind of potential negative impacts seems a little bit immoral to me, right? And I know that people talk about all the advantages of AI, and they talk about all the advantages of crypto, they talk about all the advantages of these sorts of things, but how much energy has been wasted, how much money has been poured into these systems that could have gone into having an impact or banking the unbanked in Africa, right? Or figuring out a better way of creating logistics to make it easier for people to get malaria shots or something, right?
And that's not easy, but it's a lot simpler than a lot of these, super specialized AI use cases that people are coming out with, right? I think the issue with emerging markets is the accessibility, right? I mean, I would have no idea where to start, for example.
Yeah. But what I often see is that there will be people from more established markets that have moved down to a market to spend 6 months kind of studying and learning about the market and then going executing something. And these are huge markets, right? We're talking about 1.2 billion in Africa, right? Or something like that. We're talking about 1 billion people in India. We're talking about 1 billion people in kind of Southeast Asia. There's all these places that have huge populations that are just being underserved.
How many investments have you made so far as a syndicate?
As a syndicate, it's about 130.
So what are the best investments? Like it's been 4 years, right, since you started. What are the best companies you seeded?
So we invested in a startup called Yummy as the first check. It was actually the first deal we did through the syndicate. They ended up really executing well, got into YC. They came out of YC as the best company of that batch and then went straight from YC demo day to raising their Series A. They've continued to grow at an incredible rate since then. And, I've been incredibly impressed with the founder and what they've been able to build. And it's been, the biggest markup in our portfolio. And I've been really excited by what they're doing.
Amazing. And the previous angel investments that you have done, what was your best investment?
So I've invested in 5 unicorns. They have an average valuation right now of like 1.8 billion. And, the average valuation I came in at was about 12. And so, I think we've been seeing this increase in valuations quite a bit, right? But it wasn't that long ago when, 6 or 8 million valuation was standard kind of for, even a pre-seed or seed post-revenue. And so, I think the biggest one out of those 5 unicorns, I think I'm up at roughly 300x on that investment. I mean, I think, before dilutions is probably like 150x after dilution or something like that. But, overall, it's been a pretty big winner, and I'm pretty excited about it.
And did you have exits already, like major exits?
No, I mean, most of the stuff I've invested in, so I started off slowly, right? Like I think everybody should kind of start off slowly and get the experience. So I made some investments, I think, in 2014 and some in 2015 and 2016. But it wasn't really until like 2019 and 2020 when I really started doing more and more. And so even of these 5 unicorns, 3 of the 5 I invested in the last 5 years. And so, they went from whatever, 10 million, 12 million to 2 billion in 5 years. And so we probably still have another 4 or 5 years before they actually IPO or something.
And what kind of check size did you answer this question before? Sorry. Yeah. So,
on the personal, those were personal investments. And so those were anywhere from, probably 5K to 20K for most of them. And then, now with the syndicate, anywhere from 100 to, 500 is kind of the norm. But, I'll also write, checks kind of anywhere in between as well. So anywhere probably from 10K to 500K I'll try to cover.
And what would be your recommendation for someone that just getting started, like with angel investments? How would you recommend them to get started, to invest through a syndicate or to invest directly? Like, what would you recommend to someone who gets started?
I would say come up with the strategy. And then that's probably one of the most important things is kind of coming up with the strategy first. I didn't necessarily have a strategy when I started and kind of changed things back and forth and just writing small checks and big checks and small checks and like this sector and part of it is it's pretty volatile. And, I've seen it time and time again where, people invested a lot of money into one startup or into 2 startups and those went bust. And now they're like, oh, angel investing's for suckers. And, maybe that's true, right? I might be a sucker, but I think part of it is those people had a poor strategy. And, I think diversity in terms of the number of investments is really important. I think diversity in terms of sectors is important. I think diversity in terms of vintages, like years you're investing, is important. And so kind of saying to yourself, I'm going to be an angel investor. I'm going to commit to angel investing for the next 5 years. And so how much money am I comfortable investing over the next 5 years, knowing that if I make an investment in year 5, I won't see the return of that for the next 15 years after that. So I'm making money that I don't care about for 20 years that could potentially go to zero, right? And so whatever that amount of money that you feel comfortable losing or not having access to, even successful, right? We talked about these angel investments of mine that are up 100x, 200x. I don't have access to that capital. I can't do anything with that money. So even if I'm sitting on, $500,000 or $1 million over there, it's just sitting there. I can't do anything with it. I don't actually have access to it. So how much money are you willing to kind of put into this to figure out if you're good at it or if you like it? And if you know you don't like it, right, then just stop. But otherwise, I would say come up with this 5-year plan, figure out how many investments you want or how much money you can put aside, and then probably divide that number by 50 to 100, and that's how much money you should think about as each investment. And, in the beginning, probably make smaller investments for the first year or two. So let's say you're going to make 100 investments overall. Year 1, probably plan on only making 10 investments. Year 1, wait till you see 100 or 200 investments before you make your first investment. Like, look at things and analyze things. And once you actually start seeing enough volume, then you can start to say like, oh, this is the best thing of the 100 deals I saw. I should make an investment in it. And then, you'll start to kind of get a sense of what a good investment looks like. And then you can start deploying more and more. And then you can, maybe do 10 investments your first year, 15 your second year, 20 your third year. And maybe then you start doing, only 20 in your fourth year, but you double the check size or something along those lines, right? And so, having some sort of strategy that kind of makes sense for you, that can kind of keep you engaged throughout this process, and that you kind of know like there's money that I can dedicate to this consistently. Because oftentimes, right, it is really about things that are out of your control and, what environment that company goes into their Series A with, or what environment that company goes to their Series B with, right? Like when you compare 2021, what you would get with the 3 million ARR to 2024 with the 3 million ARR, for Series A, the valuation in 2021 was probably $150, $200 million. In 2024, that's $25 to $35 million, right? Like the valuation just changed dramatically, unless you're an AI, which that 3 million AI is probably $1 billion company, right? So it also just depends on what sector you're in, right? If you were doing 3 million in ARR in NFTs in 2021, it might have been a $2 billion company. And it just depends how much hype there is around these things. And so some of that's out of your control, right? You don't know which things are going to get hot and which things are going to get hot when. And then sectors can dramatically cool off as well. And so just making sure that you're kind of consistently investing in the things that you believe in the places that you believe in, and the kinds of problems you want to see solved. And, if you end up with 50 to 100 investments, you should have 1 or 2 winners. You should have something that looks really good, right? But the thing is that you might have one investment that's up 200x and then 45 that are kind of like 0 to 2x. So like all those things that are 0 to 2x, it's really hard to, stick with it. And so you have to kind of commit yourself, I think, at the beginning and know that's going to be a process, because you don't want to miss out on that 300x here because you gave up, one investment too early. And, I think if you've gone through those 5 years and you don't like it and you haven't seen winners, then you could take a step back. But I think you got to kind of think about it as a long-term commitment in what I feel comfortable investing in, is not only for investing, money-wise, but investing your time and your energy and your thought process and your learning and all these other things are kind of going to be part of it. So is this what you actually want to give your energy to?
Great advice. Thanks for sharing. I hosted an event in Singapore last week, and I met Andrew Diaz, who is a lawyer, and he got passionate about angel investing. In the past few years, he invested 450 times. But, through syndicates, mostly through syndicates. So why someone like Andrew should join your syndicate, and how do you manage the relationship with your LPs or participants?
So I think there's a couple of reasons, right? The biggest one is just everybody has access to different deal flow, and so just because I know somebody you don't doesn't mean that you shouldn't be able to invest, right? And I think that there's this the big opportunities to find those deals. I think venture capital is a game of outliers, and that 100, 200, 300x, you might find it on your own, but I think it's a lot easier when you're seeing a lot more deals that are curated from all these syndicate leads. So, I've done, like I said, I was an LP as an angel syndicate as an angel list before I started my syndicate. Those 5 unicorns I invested in as an angel were all through other syndicates. They were all deals that were presented to me through other GPs. It kind of sucks. I have to pay them 20% carry, but if they made me 200x on my investment, giving them 40 of that 200x, when otherwise my money would have been 10% return in the public markets, more than happy to give that to them. And so it's kind of, one, you're getting access to different deal flow. 2, you're learning how different people think, right? And so with the syndicate, every deal has a memo. Every memo lays out how that syndicate lead is thinking. And there are, as an LP, I've gone through and read through a bunch of syndicate leads memos. Some of them I like, some of them I don't like. Some of them I understand their thinking. Some of the times I'm pushed to change my thinking about things or how I want to approach things. And it's kind of this constant learning process and environment. And so I think getting access to deals, getting curated thought process about why these deals are good, being able to get into deals you might not be able to get into as an angel, right? So even if you had access to that founder, they might not want to take a 10K check, right? They want to preserve their cap table, but they'll take a 200K check from an SPV. And so, it makes it easier to get access to it. Oftentimes the syndicate lead is negotiating the valuation or negotiating the price. And so, I think it's those are the biggest reasons. Like, it gets you to deals you probably wouldn't get into. It lets you see deals you might not see. It lets you write with a smaller check. Because again, if you're trying to write 100 checks or 200 checks or 400 checks, if you're trying to do that with $100,000, which is usually the minimum to get into most deals, that's what, $40-ish million we're talking about. I don't have $40 million. Sorry, I'm doing well. I'm not doing that well, but I can write $40 million into startups. I don't have $4 million, right, to really just write it to startups like in the next year or two. So I'd much rather write a 1K check into 400 startups, or write $400,000 into startups over the next 4 years, right? That's something that I can manage, and I'm happy about that. So it kind of lets you write smaller checks. This is a multi-decade type process, right? So I think it's important to think about things not just in terms of the short term, but the long term. And really, anybody starting out, probably for the first 10 to 20 years, you're still just learning, right? Like, I've been doing this for more than a decade, and I still feel like I'm learning. And maybe I'm starting to wrap up the beginning of my process and enter the intermediate part of my process. But, to try to just do the deals that you're going to find on your own that let you write a 1K check in and all that sort of stuff, it's just it's almost impossible.
And how did you build your fellowship, like syndicate participants? Did they come through AngelList, or you kind of did PR around it? Like, how did you build your syndicate?
Yeah, so in the beginning, it was kind of the pandemic, so everybody was just stuck at home, and so I started just like reconnecting with people and saying, "Hey, like we haven't talked in a while. What are you up to?" And then, okay, yeah, I'm also starting this thing. Is it something that's exciting to you? What kind of deals would you want to see? What do you want? Like, just kind of hearing about people and their experiences as well. And then it kind of just kept on growing. So I brought some people into the syndicate. Then we started doing deals. The deals started doing well, so they told their friends. Then we would do co-syndications where I would work with other GPs from other syndicates, and we would share deals, the deal flow. And so then we'd have multiple, like their LPs would see my deals, and if they liked it, they might join my syndicate. I ended up going on a variety of different, podcasts, things like that. So people would hear me and see me, and sometimes they'd like what I'm saying, so they call me an idiot. But, overall, they if they like what they're hearing, they might end up joining the podcast, or they might from the podcast, might end up joining the syndicate. And then, kind of just try to build in public and let people know what I was doing. And so sharing on LinkedIn about my process and what we were seeing. And then, maybe they didn't want to come in when I was starting the syndicate, but then they saw, oh, hey, this company we invested in pre-seed just raised their seed or raised their Series A. They're like, oh, wow, that's a really cool company. Let me find out more about what he's doing and why he's doing it.
And what are your kind of long-term goals for First Check Ventures? You mentioned after 10 years, you're still learning. I'm sure you're doing much better than that. But what are your long-term goals? Where do you see yourself in kind of 30 or 40 years?
4 years ago, I started the syndicate. So I don't if you asked me what I was doing 5 years ago, I wouldn't have said I would be an angel investor or be a VC, right? So I feel like things just change so quickly. And I think especially when you're kind of open to possibilities, right? Like I was living in Mexico City 3 years ago. I was in Colombia I was in Thailand, working for different companies, working in different sectors. And so I try not to think about I have ideas about what possibilities might happen over the next 5 years or 10 years. Right. But I really love what I'm doing right now. I think it'd probably be just figuring out more ways to continue to add value to early stage startups. I think it would be continue to find ways to work closer with LPs and build relationships there. I think it's probably adding in, more and more companies that I get really excited about working with. I try to work closer with founders. Maybe eventually adding in more people to the team, and getting more help for these startups rather than just me. Right now, I'm still a solo GP, and so it might be nice to have more people to bounce ideas off of or to work with and collaborate. Right, I think a lot of all this is kind of a collaborative environment, so I think it'd be great to have great co-founders, or great co-investors, or great people just to work with.
Did you consider raising your own fund and be a VC, or you like the model of the syndicate?
I think there's advantages to both, and I'm exploring my options.
And have you got any tips for founders or entrepreneurs reaching out to you with pitch decks? Have you got any tips or common mistakes you see?
Yeah, I think just be direct. Reach out, just say hi, tell me a couple of sentences of what you're building, just send me the deck. Oftentimes people will try to build a relationship, but it's very transactionally building it. And so it just slows down the process because I know if you're a founder, you just added me on LinkedIn and you say, hi, how are you doing? I know you don't really care how I'm doing. And if I got to go and ask you how you're doing, and then you're telling me about your cat or something, right? It just doesn't really, it's wasting my time and your time. If we end up moving forward, if we end up, going through the process, we'll build a bond. We don't need to artificially create it right now in the beginning, right? So it's my job as a VC to look at your deck, to try to be helpful, to try to add value to you, right? That's my whole my whole thing. Like I get paid for that, right? That's how I'm so.
Does cold outreach work with you, or you prefer referrals?
So cold outreach works because I find that a lot of people will try to get a referral, and the referral isn't a warm referral. So they'll like find somebody random in their network who they've never worked with and who I've never worked with to then, email me or message me, or maybe it's even somebody who I have worked with, but who's a friend. And they're like, yeah, I don't know. This guy randomly messaged me. I've never heard of him. And, my number one question to the referrer is like, hey, would you invest in this company? And if they're like, I have no clue or I wouldn't, then why would I it's kind of not even worth my time, right? And I'll do it usually as a favor to whoever referred them, but I'm not excited to take that meeting.
Also for first check, the hustle of the entrepreneurs is quite important, right? Like to see how they get to you directly and they, convince you. So I think it's also quite important for the first check.
Yeah. So I'm fine with the cold outreach. I think cold outreach is important, right? But just give me the information, right? Like, and if I'm excited, I'll reach out. If I don't respond, feel free to follow up. Don't follow up a day later, follow up a week later, right? But I'm busy. I travel a lot. I'm on planes. Sometimes I come out, there's 15 messages waiting in my inbox. I don't get a chance to respond to all of them. And so, if it's something that's important, push me. I wish I had a better system to take care of everything or whatever, but just kind of how it is, right? Like we get busy, we get distracted, we need to reply to an email, we forget to. Just how life is.
You respond to what is on the top.
Yeah.
Of messenger or email. Yeah. And what are the main traits that you look for in entrepreneurs that, most of the entrepreneurs you see, they're pre-product or like MVP. How do you choose who going to make it?
So a lot of the thing it probably is around hustle. And so most of the investments I make are actually post-product, post-revenue. Right? I think right now it's incredibly cheap to make most things happen. Especially kind of if you're not doing AI, you're not spending all this money on servers and blah, blah, blah. So what I found is that most of the founders that I work with have already built their MVP. They already have some customers, but they still haven't been able to secure that first check. I think to a certain extent, venture is supposed to be really to scale you, not to say from 0 to 1, but from 1 to 1,000 or whatever. And so, if you have that 1 and I can see how you're going to 2 or 3, it makes it much easier for me to, add fuel to the fire with cash. But I'm happy to look at things that are at 0 and pre-product, pre-whatever. But it's usually, I usually step back and ask, why is it still pre-product? Why is there no customers? Why is there no revenue?
And especially there are so many no-code tools, right? You don't need to be a developer to test ideas anymore.
And, we have AWS, so you don't need to have servers and you don't need to have a hardware engineer. And you don't there's all these marketing tools. You don't need to have there's just so many things that we've now been able to kind of outsource. And especially now with AI, you can go through and have a 1-person team that has the impact of a 10-person team used to. And so, when you think that Instagram built $1 billion company with 9 people or 8 people, why can't you get to $1,000 in monthly sales or $2,000 in monthly sales, right? Like it's at least it's something, right? It shows there's somebody out there willing to pay you something for it.
And you moved to, is it Puerto Rico recently?
Yep.
Oh, a few years ago. What's it like over there? What's the ecosystem like? Is it quite crypto heavy? Because that's kind of the perception that I get from media and the news, etc.
Yeah, so I think it's an interesting mix. A lot of the people that have moved here, so there's tax benefits to being in Puerto Rico. And so a lot of people have moved here to take advantage of the tax benefits. And so a lot of those people are crypto heavy. A lot of those people are actually also, successfully exited founders who are thinking about building again and who now they've already kind of had one exit. They already kind of have the contacts to get funding and blah, blah, blah. And so now they want to kind of be able to preserve more of their capital with cap, with the reduction of cap gains and tax advantages you get from being in Puerto Rico. And then I'm also seeing more and more fund managers come down here as well. I think, we moved to a very kind of work from home, work globally type environment. And so if you're going to work from anywhere, why not work from the beach, right? So I think it's been a really interesting environment and change. There's also a really interesting local ecosystem that's been developing around startups and supporting startups, and an interesting mix of kind of non-technical startups that are focused on improving kind of things for the island, but also then some technical things in apps and things of that nature. So overall, it's been a pretty fascinating environment to work in, and I'm really happy to call it home.
Do you see yourself living there for long term?
I don't have anywhere else I want to go at the moment. So, opportunities happen and things change. And, I never thought I'd be living in Colombia or Mexico or Thailand or whatever. But, if the right opportunity happens, I'm happy to take it. But, I'm also pretty happy here. And I still get a chance to travel quite a bit. I spend about 5 months a year traveling already. And so I think that kind of gets a lot of other places out of my system. And it's kind of nice because I think Puerto Rico is a little bit more laid back environment. So I could go to the big cities, get it out of my system for, a month and then kind of come back and relax a bit.
Yeah. Kind of Nico and I, we live in Portugal. So we have the same feeling that it's good place to be. And, it's not too busy, it's kind of, you can be as busy as you want, or you can just chill and be on workation or vacation without traveling. So it's quite easy life, So.
And it's amazing what be able to take these like little breaks, right? And like, my building has a pool. And so like, after 4 or 5 hours of Zoom calls, being able to like go outside and swim outside, and you have the sunshine and you have the pool and, exercise and get the endorphins going. And it's just like so much, happiness and light it brings to your life versus, living in New York in a cold, crampy apartment and there's like a breeze and there's snow and there's all this stuff and it's loud and noisy and rats and like, I don't know. I feel like it's nice to be able to like just take advantage of the natural environment and enjoy it and, having that sunshine, having that brightness, having that the vitality around you, I think gives you vitality as well.
Got it. Yeah, that's great. And so like we always ask about work-life balance, but you already addressed it. You travel a lot, but at home you have that balance of, taking a break. Do you do any fun sports? Like what do you like to do apart from the pool?
Yeah, so a lot of what I do. So I do think I work a lot, and I don't know about if I actually have work-life balance yet, or if anybody who's really trying to do something significant ever does. But I also love what I do, and I was doing this as a hobby for the last 10 years before I started doing this as a job, right? So I was doing this for fun, and now my whole life I feel like is like, instead of like my whole life becoming work, I feel like my whole life is just fun, and the fun is actually something that other people consider work, but I just consider it like what actually brings me joy. And so I still try to take time to do other things that I enjoy. I grew up in Minnesota, and so it was cold a lot of the year, and it was a lot of snow, and so be able to take advantage of the tropical environment and work out and work outside, and even in Christmas Day last year, right? I'm swimming outside in a pool, and it's kind of this kind of mind-boggling thing that like every day for me is kind of like what vacation used to be like when I was a kid. And so, I'm not super active into a lot of the ocean sports or anything like that. Yeah. And I feel like I'm still kind of just getting back into used to being kind of in this environment. But, I do try to get out and go swimming, almost every day if I can.
Yeah. It's kind of, I think we are, had a very fruitful discussion. Thank you so much for joining and sharing your insights. We would love to collaborate with you, co-invest with you. We are hosting our own summit on November 13 in Lisbon. So we'd love to invite you to join us, explore Portugal as well. I don't know if you've been to Portugal already.
I've been a few times. I really like it a lot.
Amazing. Yeah, so we are organizing our global summit on November 13. We recommend to come from November 11 to 14. There is also a web summit during that time. So there is a lot of side events. So we invite our global community to gather and spend quality time together. So we'd love to see you in person if you can make it. And thank you so much. And we will release this episode probably this Sunday and share it with you. Thank you.